the channel. Immensely appreciate that. For today's video, I want to do a quick recap on today's performance in the portfolio. But then more importantly, I want to talk a little bit about trading with margin in a brokerage account. You have to be very, very careful with that. If you guys remember from last video, I was doing a Boeing call contract that I was trying to roll. I could not roll that contract because of issues with borrowing on margin to do other trades. I didn't think that was going to affect that Boeing contract at all, being able to roll that forward. Because I could not roll that contract, it's going to cost the portfolio thousands of dollars. So I want to make sure that you guys are aware of this. You guys don't also do the same mistake that I did on the portfolio. Before we do that, let's take a quick look at the portfolio. As you can see here today, down 1.06% in the red, 6,368 in the red. Really from the beginning of trading today, this is all pre-market trading here, active hours trading, stayed in the red, fortunately only losing 1.06% of the overall portfolio. But if we take a look at Boeing, unfortunately it trended down again today. So for today, down 2.41%, $3.93. But the past week it's down 6.27%. I had to sell, or excuse me, I had to buy contracts back here. Had to spend about $53,000 buying back contracts, with the idea that I would simply sell those off for a later date at about the same price or maybe a little bit less, make about $45,000 or so. Unfortunately, I could not do that trade, and I'll emphasize that again today. So if we go to trade Boeing options, if I want to do a covered call, so I do sell, call, you can see current price is $159. Let's say I want to put a contract in for $165, meaning I'll have to sell Boeing for $165 if Boeing is at $165 or above $165. If I put that contract in, we'll just do one contract. You can see that here, $165 call. Total credit will be 82 cents times 100 shares, $82. If I continue, you can see that here. Review order. So I'm selling 100 shares of Boeing at $165 or before August 26th. So that'll be an obligation I'll have to do if the buyer of the contract wants to assign that to me. If you aren't asked to sell Boeing by then, you'll keep your collateral, which is 100 shares of Boeing here, and the full $82 credit. If I click submit, you can see that there's an error and it's saying I can't place this trade due to margin maintenance requirements. To place this trade, I'll have to increase my cash balance, canceling existing orders which I don't have, or selling existing positions, again to free up capital for the trade. I did not understand why this was happening, but after doing some research, it's because of all of the contracts I have with Tesla. If we go back to the portfolio, this contract here, or these contracts here, 3 contracts, 300 shares, Tesla 900 put, I have $270,000 of cash tied up in this cash secured put, and all that cash secured put is from margin capital. So because of that huge requirement here, it's affecting that Boeing call contract. I can't do that call contract. But if I go back to the portfolio, you can see buying power is $68,000. So that's not necessarily true. I can't even roll one contract as I did prior. So again, going back to Boeing, if I try to do one call contract, it's not letting me do that, even though the cash requirement's not going to be anywhere close to the the $68,000 that I have for buying power. I can't do that at all. So that was a huge mistake. After thinking about it, it makes sense from the brokerage side of things. They don't want to have a client having too much exposure in the market. The market does start trending down or trending any direction if you have puts or calls. So that was my mistake. I want to make sure you guys are aware of that. You can't necessarily trust the numbers, especially with Robinhood here. I found that this isn't necessarily the case. I don't necessarily have this much buying power for all types of trades. So what I'll have to do is try to get out of this trade here. I am bullish on Tesla moving forward. It has a split coming up, a 3-to-1 split. It did trend down a bit here, so because of that, market value to buy back these contracts will be almost $12,000 in the red. I did make $5,364 on the trade, so overall the total return will be negative $4,620, which I may have to do. If I do that, I'll lose on this trade $4,620, but then I can go back into the portfolio and do that Boeing contract. and then I could go back and probably do a couple more of these contracts. I probably won't be able to do 3 contracts, again, because of the margin I'll be using, the vast sum that I'll be using with that trade. But at least I'll be able to sell that Boeing contract off to get back a portion of the profit. And another, unfortunate event is because Boeing has been trending down, the contracts, if I were able to sell those off on the 18th, it would have been about $23,000 or so. And if I would have put that expiration date a couple weeks out, it would have been about $46,000, $47,000. Just under the $53,000 that I spent. So I'd only lose a little bit of money on that trade. But if we do that same contract now, so again, the 165 contract for this Friday would have been about $27,000, I think, somewhere in there. But if I do a Boeing contract again, sell call 165 for this next week, you can see because Boeing's been trending down, this is only a fraction of what I can get now. So I'll do the full 12 contracts here, and you'll see I'm only going to get $984. Before, I'd get, $27,000. It might have been a little bit lower, maybe $22,000, but I would have been able to get $20,000+ for this trade. Now I'm only going to get $984. So that's the power of trading with these contracts. I'll just highlight here 1 month. You can see how dramatic these contracts can change. 139 down to 38 down to 23. So this is how a lot of traders make quite a bit of money. They'll jump into a contract that's down here. So this is even, a better example of that. This was getting down to just a penny here because the price of the stock was trending up so dramatically. Then as it trended down here, it went from a penny to $208. So if you were able to put, $5,000 in here, you're looking at hundreds of thousands of dollars. That's how these options traders make so much money. You can make a ton of money with these, but unfortunately, if it does start going the wrong direction, you're going to lose all of your capital that you put in. So it's high risk, high reward, and unfortunately, it's going to cost me on the portfolio. I can still save this contract, or I can still save this trade. It's just unfortunate because I'm going to be losing a lot of money in the short term, a lot of money that would have been a great addition to the portfolio, especially since it has trended down now again under $600,000. At one point, up over $900,000. So I have quite a ways to go before that rebounds. But again, just wanted to quickly touch on that. You have to be very, very careful when trading on margin. It's going to potentially affect other trades that you think are safe that have nothing to do with that margin capital. But unfortunately, if you trade on margin, the portfolio will consider everything in your portfolio is on margin, even though you might have bought those stocks outright. If you do have any capital that you're borrowing with margin, you have to be very, very careful with that. So with that, I'll kind of end this video. Don't want to make it too long here. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. I want to thank you guys for all the great video ideas. I have a spreadsheet with all of those in the spreadsheet. It's going to take a few weeks to get those videos out. I do apologize for that. If you guys are new to the channel, if there's something you want posted on the channel, a topic, please let me know, and I'll do my best to get out a video for you guys. So with that, I'll kind of end this video, and we'll see you guys next time.